Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Deewin Tianxia Co. Limited annual report. Deewin Tianxia Co. Limited offers a diverse range of businesses and services through its three main segments: logistics and supply chain service, supply chain financial service, and Internet of Vehicles and data service. The company's logistics and supply chain service segment provides various services including automobile manufacturing, supply chain and logistics, warehousing, leased automobile management, distribution of commercial vehicles and components, and other related products. This segment caters to a wide range of clients such as raw materials suppliers, resources companies, express courier service providers, commercial vehicle manufacturers, sales dealers, logistics companies, and end customers. In addition to logistics services, Deewin Tianxia Co. Limited also offers financial leasing and factoring services for heavy-duty trucks and commercial vehicles through its supply chain financial service segment. This includes the provision of satellite positioning devices and related installation services under financial leasing arrangements. The company's Internet of Vehicles and data service segment distributes IoV terminal products and solutions, as well as provides data services to clients. Overall, Deewin Tianxia Co. Limited offers a comprehensive suite of logistics, supply chain, and financial services to various industries in China. Deewin Tianxia Co. Limited maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Deewin Tianxia Co. Limited trades at a higher price-to-earnings ratio of 31 times and a higher price-to-book ratio of 1.36 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 65% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified from the extracted summaries. Revenue growth drivers. The commercial vehicle market's dual growth scenario has contributed significantly to revenue growth, as seen in the increase in number of heavy commercial vehicles connected to IoV platforms. The launch of the Smart Logistics platform and the development of the Deewin Tianxia business have also driven growth. Overseas expansion through subsidiaries and investments in new energy vehicles have further boosted revenue. In addition, the company's financial leasing business has seen a significant increase in newly invested funds and effective finance lease agreements. The factoring business has also received additional investment, while the launch of the Deewin Tianxia certified pre-owned vehicle platform and establishment of an integrated pre-owned vehicle service system have contributed to growth. Revenue decline drivers. On the other hand, revenue decline drivers include a decrease in logistics and warehousing service revenue by 23% from 2024 to 2025. IoV data service revenue has also decreased by 11% during this period. Revenue from contracts with customers within the scope of IFRS 15 has declined by 7%, while other sources, excluding sales and leaseback financing business, have seen a decrease of 2%. The loss of high-value customers and delayed electrification plus intelligence upgrades failing to meet customer demands have also contributed to revenue decline. The net income of the company experienced a significant decline between 2024 and 2025, with a decrease of 62.1% from RMB 156.7 million to RMB 59.6 million. This substantial drop is attributed to various factors that impacted the company's financial performance. In addition to the decline in net income, the profit margins also suffered a significant reduction. The profit margin decreased from 16.4% in 2024 to 14.3% in 2025, indicating a decrease of 2.1 percentage points. Furthermore, when comparing the 2 years separately, the profit margin dropped from 6% in 2024 to 2.2% in 2025, resulting in an even more substantial decline. The reasons behind these changes are not explicitly stated in the provided text, but it is clear that the company faced significant challenges between 2024 and 2025, leading to a substantial decrease in both net income and profit margins. The company's financial performance indicates a strong ability to generate cash from its core operations. The numerous references throughout the report confirm that the company is indeed producing positive operating cash flow. This is evident in the significant increase in net cash generated from operating activities, which rose by RMB 109.8 million. Furthermore, various sections of the report explicitly state that the company is generating positive operating cash flow, with some even summarizing this as a key takeaway. The presence of such consistent and clear language suggests that the company's financial management is effective in producing cash from its core operations. The data provided also supports this conclusion, with net operating cash flow figures consistently showing positive results. This includes a notable figure of RMB 146,913, which further reinforces the notion that the company is generating significant amounts of cash from its operations. Overall, the evidence suggests that the company's ability to produce positive operating cash flow is a key aspect of its financial performance. The company's debt level has undergone significant changes from 2024 to 2025. The consolidated total liabilities increased by 31.6% from RMB 1,956,679. This increase is largely driven by the growth in non-current liabilities, particularly borrowings, which rose from RMB 2,075,435 to RMB 3,665,984. Additionally, bank borrowings saw a substantial increase of 71%, from RMB 2,164,857 to RMB 3,730,434. The total debt has also increased significantly, rising from RMB 5,107,792 in 2024 to RMB 6,734,624 in 2025. Furthermore, the company's borrowing saw a notable increase of 66.5%, from RMB 1,576,205 to RMB 2,623,597. The total debt at the end of 2025 stood at RMB 7,959,587, indicating a substantial rise from the previous year. In terms of interest expenses, there has been a notable increase. Net finance costs rose by approximately 80.3% from RMB 8.9 million to RMB 16 million. Interest on bank borrowings also saw an increase of RMB 22.1 from 2024 to 2025. Finance costs net interest expenses increased from RMB 88.74 in 2024 to RMB 15,961 in 2025. Furthermore, interest expenses on borrowing in 2025 reached RMB 30,330, indicating a significant rise compared to the previous year. Overall, both debt level and interest expenses have seen substantial changes from 2024 to 2025, with the company's total debt increasing by over RMB 1 billion and interest expenses rising by approximately 80.3%. The company's performance can be analyzed through its various segments. On the positive side, the supply chain financial service sector and IOV and data service sector have shown resilience in the face of economic downturn. The former saw a decrease of only 17.8% in gross profit, while the latter experienced an increase of 9.4%. Additionally, specific business units such as supply chain service and IOV and data service have reported significant revenue and gross profit figures. In contrast, some segments have underperformed. The logistics and supply chain service sector has seen a decline in gross profit margin by 1.7%, indicating a need for improvement. Furthermore, the logistics segment has reported lower revenue and gross profit compared to other units. Moreover, the finance costs/income net has been negative at RMB 20,417, highlighting financial challenges within this area. The management's outlook for the company is centered around innovation and sustainability. They plan to advance innovation in three key areas: business, market, and model. This will involve establishing an automobile ecosystem sector business and adopting an open approach to build a comprehensive platform. In addition to driving innovation, management is also focused on addressing climate-related risks and opportunities. The group will continue to monitor these issues and adjust its strategies accordingly based on operational performance. This includes evaluating emission reduction measures and implementing them as needed. Furthermore, management recognizes the importance of employee development in achieving long-term sustainable growth. As such, they plan to review and optimize their training programs to support employee growth and development. The company has made several significant transactions in recent years. In terms of acquisitions, there have been no notable purchases or mergers mentioned in any of the available pages. However, the company has engaged in divestitures, which involve selling off certain assets or businesses to other companies. Two notable examples of divestitures include Deewin Tianxia Co., Limited, which was sold as per page 153. Additionally, the company transferred out loans receivable worth RMB 986,282,000 under its asset-backed security program, although these were not derecognized from the company's balance sheet, as stated on page 174. These transactions demonstrate the company's strategic efforts to manage its assets and liabilities, and to optimize its financial position. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out significant amounts to its investors, with RMB 88,915,000 declared and paid in 2024 and RMB 76,634,000 in 2025. This demonstrates the company's commitment to returning value to its shareholders. In addition to dividend payments, the company has also engaged in share buybacks. In 2024, the company bought back a substantial number of shares, with a total of 28,583 shares repurchased and canceled during the year. This strategic move not only benefits existing shareholders, but also helps to maintain a healthy stock price by reducing the overall number of outstanding shares. There are valid concerns regarding inventory buildup and supply chain disruptions. The data suggests a significant increase in average turnover days of inventories, indicating a potential issue with inventory management. Furthermore, logistics and warehousing service revenue decreased by 23% from 2024 to 2025, which may indicate possible supply chain disruptions. The decrease in logistics and warehousing service revenue is a red flag that highlights the need for companies to reassess their supply chain strategies. Additionally, concerns about inventory buildup are evident on multiple pages, including page 27 and 28, where it is explicitly stated that there are issues with inventory management. The company's own logistics and supply chain businesses also raise concerns about inventory buildup or supply chain disruption. Overall, the data suggests that companies need to address these concerns to prevent further disruptions in their supply chains. By doing so, they can ensure a smoother flow of goods and services, which is essential for maintaining customer satisfaction and competitiveness in the market. That concludes the financial summary for Deewin Tianxia Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.